All right, let's take a look now. This has been updated. You were here yesterday, of course, where we left off. We have updated the monthlies and the weeklies, and we were expecting we're having a very nasty consolidation that would take us lower, or at least we are going to be stagnant, but that's not really the case. So anyway, let's take a look first. This is the monthly chart that we're having here. Now we can envision why we're having such a very strong consolidation, simply because you find that we have broken out of that neckline and we are rejecting at this high degree neckline. This neckline comes in at 114.4, 113.4. So definitely we just rejected at 113 and are currently consolidating between these two levels. Today we dropped all the way to 50% of between the two cycle levels, actually 113, and we can even get to see lower levels, 112.7. We'll take a look now at the hourly and the 4-hour charts. Anyway, this is definitely consolidation because of the because we have an internal degree 1-2 signal on the monthly chart and very strong momentum on the weekly and on the daily. So this is a very important signal for us. This market actually comes up all the way from 75. And this kind of pattern that we're having on the monthly appears to be some kind of at least a wedge or a pennant. You could draw a line here and you could draw a line there at the top. If you draw a line here this way, we're going for 118 inside. Even if this were bearish, that's what we were looking at. We're going to spike 119.50 and 118.16. We should have these lines drawn, but we didn't want to complicate matters. Anyway, at this point we expect we're having a degree, internal degree 1-2 right there, 1-2 at this ledge. We are in a wave 3. It's taking a bit time, but the trade is valid, the trade is correct. This is that internal 1-2. We have very strong momentum again on the weekly chart, like we've been saying. This has been now very hopefully this has been very accurately hopefully segregated. There's a high degree 1, there's a high degree 2. This is a breakout into a 3 because we are broken above that dashed white line. This is very important. High degree 1, high degree 2 in Roman italics. We're doing now a high degree 3 into 3. Yes, we are doing a correction, but it should not fall below this dashed line, 112. We're still on track. All right. Okay, so projections now of this current higher degree 3. The first leg is going to be 116. We have 161.8 here. And this is taken projection right from level 2 all the way to the level 5. We're looking at 161.8, 116. And then, of course, we have a congestion of levels here at the neckline. There is 115.8, 116.7. And above the neckline is going to be 118.6. So we're just looking first at 116 and 116.3 and 116.7. The market did a wave 3. Right now internally we're doing a wave 4 also internally. This takes us now to the shorter term trading cycles. On the daily chart we're bullish, very bullish, because we have an internal 1-2 degree signal here. All right, and currently the market is doing a wave 4 as already outlined. Okay, so there's a 1-2, there's a 3. This is a daily chart, a 4, and this actually looks like either one of two things. We're having some kind of a bull flag, an A, B, and a C. It could still do a D and it could do an E. We expect it will rise all the way to the top of the flag and then do an inverted shoulder before it begins to break out higher. So until by the time we get to see any positive momentum on the 1 hour and on the lesser chart frames, we expect that 112.65 and 113 currently are excellent buy levels. We're buying, of course, against the top of a 1. Remember, this is a 1-2, there's a 3, there's a 4. At the most you are looking at 112.3. All right, so intra-week levels come in at this point. 112.3 is the breakout low for the week. 112.14 is the breakout low for the month. 112.8 is the fluctuation low for the month. 112.75 is FL here, fluctuation low for the week. So if you're not already long, Okay, you would want to compile a position. Now we take our entries lower between 112.3 and 112.75. If we're long at higher levels, 113.7, we want to get out. Okay, at that red arrow. So let's take a look at where that red arrow is actually. We're looking still at that bull flag pattern. So in principle, short-term trades would mean that we're always buying 112.7, 112.3. Remember, this is the top of a 112.3. Over here it shows even lower, but let's just say comes in at 112.15. So in essence, we're always buying these levels, taking profits at 114 and 113. That's 114 here, 113.8. So if we are already long at 113.7, we would want to take profits at the next round up at 114.8, reload lower at 112.3. These are the same levels, of course, daily, weekly and monthly. So let's go now to trade management. All right. This is the current segregation that's going on the hourly chart. You'll note that we could actually be having here a double head, and this could break lower. It doesn't mean it's going to break lower below level 1, but it's going to break lower to that neckline. Okay, so it's an excellent ideal buy at that level here, 112.7, 112.3. Actually, you want to buy that neckline. That neckline comes in at 112, but let's say we're not very accurate with that neckline. It's 1-1 and internal 1-2, so we would want to buy at 112.3 again. 112.3 and 112.7 are these levels that are shown here. 112.7, 112.3. They're the same levels that we're having, of course, on our pivot levels for November and our weekly pivot levels. Okay, so we stay focused on 112 point today, that is, these are today's entries, 112.79, 112.75. If we're still going to be short term trading it because of the negative momentum, we have a negative momentum. We're in a bull flag. This is a 1 hour chart, so we would expect stagger momentum or splatter momentum, but we're also having negative momentum on the 4 hours. So we will first do an intraday trade, buy 112.75 today, entry 2 minutes, stop is just 112, just 111.9 below level 1. We just check that, so the risk is about $138 for these 2 minutes. We're targeting 114.10. This is here yellow arrow, 114.20, and even lower if you wish comes in at 113.8, like we've been saying. At that point, we're having double shoulders, we're having double heads. We're gonna take out the neckline, go to 112. That's what we think, because of the negative momentum on the 1 hour, the negative momentum on the 4 hours. Okay, so you're going for 112. So at that point, we want to buy 112.3, 112.15. We have here 112.14. This will be the final buy. I think that would be the end of the move altogether. Why we think this is going to be the end of the move? Somehow we've not had that segregated, but there is an A, there is a B, there's an AB. So that C is going to be, this is a 3, this is a 4, this is a 5. 5 will take you down to 112. We're still working on that segregation. Will take you down to 112.14. This is your ideal entry long, we think, after the current bounce and after rejection at these red arrows of 114 and 113.8. We buy 112.4, 112.3. This time, I think, and then at that point, you are going, hopefully, of course, to these levels. This is the daily chart, and 115.7, 116. Okay, we'll have, of course, exact projections then, but that will be the breakout. That's what we are meaning to point out. Okay, so intraday traders today, United States dollar against the yen, yields should be rising a bit. We're going to buy 112.75, 2 minutes, stop is 111.9, actually not 112. The risk is around $148, and the target is going to be 114.1. This is $250 or $248 in reward. All right, if we break below 112, everything changes, right? Then we'll get a bearish picture. Of course, all of us now understand why. If we break below that level, we break this thick neckline, we're in trouble. I mean, there's a head, we break this point, we go into that neckline, and the whole technical picture becomes different. So we just need to keep that into focus too.